jumps to a 7-month high. Let me start off by saying thank you to Jeremy, who is providing the daily update to you while I was cruising the Gulf of Maine on board a 112-year-old three-masted schooner. Okay, let's start looking. It's good to be back, but let's start looking at the market. So what has happened since I was enjoying my cruising days? Not a lot, I'm afraid. The market continues to consolidate and regroup after its recent gains. There have been no major trend changes since I was away, and that's good. Looking across the pond, that's pretty much the same. I see nothing has really changed, and they continue to kick the can down the road. It looks as though the euro has pulled back from its bull run. However, the trend continues to be positive for that market. And we're looking at the euro, of course, with the other markets we always look at. Now let's go to the charts and our trade triangles and see what's happening. So right away, at my homepage on MarketClub, it's good to be back. And you can see, welcome Adam Hewison. So it's nice to be welcome back on your own homepage. But let's go to our portfolio manager. And you can see that we have the S&P 500. It's plus 90, meaning it's a strong trend. Even though we're down just a fraction today, it was higher for most of the day, and that was based on the consumer confidence index. So let's take a look at the S&P 500 and see what we come up with. Well, as you can see, we've our trade triangles are basically a plus 90. We have all of our trade triangles green, indicating the trend is very strong, and nothing has really changed since I was away. And just to put that, to emphasize that even further, let's take a look at what we were drawing, the picture we were drawing in this market. And that was, we had a really large energy field, which is right here. That's a very, very strong energy field. We drew a straight line across here. I'm doing this as best I can. And this is what we consider to be an energy field. Okay, so that's this is capable of pushing this market higher. Now, this area, the breakout was right around here, which is pretty much where our monthly trade triangle came in at 1,415. You can see that right here. And you can see that we continue to press up. Now, for the last 8 days, the market's sort of just gone sideways like that. I don't consider this to be a bearish pattern at all. And what it's doing is, if you look down at the Williams percent R, we're beginning to get oversold, much like we got oversold here and here. And we saw a nice rally from this point, which if we just scope that up, was right around these levels here. So we could see something like that occurring pretty quickly and out of the blue. It doesn't, a lot of people are trying to think, well, things are quite bad. And maybe they are, but the reality, it's perception, perception, perception. If people perceive the market's going higher, then it's going to go higher. So let's clear the screen, go to our next market. And that's going to be looking at the Dow, if I'm right. It's sometimes you forget these things when you're being away on enjoying the beautiful state of Maine. And it's pretty much the same pattern there. You've got a nice energy field right here. The Dow is the Dow 30 is fractionally changed for the week. Still plus 90, strong trend, getting into an oversold condition. Watch that. And we'll probably see that the volume is pretty light coming into these days. So let's see how this market continues to consolidate. We need to get a nice close, probably over, to really get this market going over the 13,653 level. So about another 120 points higher, 150 points higher, this market will start to move up, much like it did here. So you're looking for that big one-day up and then jump on board then, especially when you're coming from an oversold condition. So let's go to our next market, and that's going to be the NASDAQ. And again, this market's beginning to consolidate. We've been moving sideways, very oversold, notice. And some of that, probably the last couple of days, is probably Apple. But the reality is this market is still in a bull market. And we can see our monthly and weekly still very positive. And only the daily is a little bit negative. When we tend to prefer looking at these two, the longer term and the intermediate term, when looking at the indices. So let's go to our next market, and that's crude oil. And crude oil is really, in my opinion, we're getting close to an area that we want to be looking to buy this. Now, we do have a minus 60, which is a trading range. And look what's happening. We've got this sort of little thing going here, oversold. And the other thing I want to share with you is the Fibonacci, which is we consider to be a very important indicator. So let's just go to two things. Let's go to a simple close-only chart. And let's clean this up a bit, take away the Donchian trade channels, which we like, which is right here. Just click here and click on the parabolic. Boom, it takes it away, makes it very clean. So going back to the Fibonacci, you just draw from the very, click and hold, drag down, and there you have it. You can see we're right in that 61.8%. 92.30 is the area it should beginning to find support. And we're just a little bit below that right now, and we can see it having, but you can see we're making new lows here, and this is the other thing to look at too. We're making new lows like here, and yet we're making new highs on the momentum. So it means it's losing its downward momentum. Now you may want to wait until we see maybe a 3-day high like this turn green, and if it does, then maybe jump on board, because I think we'll see a move up. Now this is a very volatile market, simply because if something happens to the Straits of Hormuz, or this rhetoric between Israel and Iran picks up even further, it could be a real move that would just happen overnight. So really be careful about being short this market. So let's clear the screen off, go to our next market. And the next market we're going to be looking at is going to be the Euro US dollar. Now I want to show you this because I think it's really deceptive. It looks like it's topped out, and it has on an intermediate basis. But when you look at this chart, this type of formation right here is not bearish. When you have the run up like this and you have this pullback like this is not a bearish formation. What you want to look at now is for this market to turn back, break over this line here, and then get long, add to your long positions, because you can see our monthly and weekly is still very positive. This is a formation we're looking for the 135 to 138 level on the euro, and you can see we're pretty much trading around the 129.5 level right now. So just watch that very carefully. So if you get a nice pop up on a day like maybe this day, then get long, because I think we're going to have another push up. Again, you're seeing the momentum there, prices going down, yet momentum's going up, indicating a potential reversal coming up in this market. So let's pay close attention to that in the few days ahead that we have. So let's clear the screen and go to our next market. And the next market we're going to be looking at is going to be gold. Much the same in gold. We're still very positive on this. You can see we got our monthly and our weekly positive. Only the daily is a little bit negative. And again, this is if you're a short-term, very short-term trader, you should be out of this market right now. If you're an intermediate-term trader, you should be long. And if you're a long-term trader, of course, you will be long. So this is what we see in this market, is basically just a consolidation, much like we've seen in the past in this market. And you just have to look back and see how this goes. So you can see a little bit of consolidation here, 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 and here. So I think this is just like, if you look at this, it's sort of like, it's almost like steps going higher, and I think we're going to see this market go higher. Again, we're getting into an oversold condition, much like we were here and here and here and here. So again, if we just stroke these up here, you can see they're very close to the lows. So I think it's not a way to want to get out of this market, and it's just a way to really see this market go sideways, and then eventually I think we'll see a big move up, break through the 1780 level, and of course the big psychological level here is going to be, the big number is 1800. We need to break over $1,800 an ounce. If we do that, then we're in great shape. So stay long, stay with our trade triangles. Really a very powerful way to look at this market and trade this market. And if you're a really short-term trader, watch this daily trade triangle. That turns green, get long. So let's clear the screen and go to our next market. Next market we're looking at is the copper market, December copper. And again, this we consider to be a positive trend. And the one thing I want to share with you here just very quickly, the reason I believe it stopped, this market stopped right around these levels, is because of this formation. Here you have a double bottom like this. We call these twin valleys, and you have a pivot point right here. Now, if you watched our video that we had on MarketClub this past weekend, you will know we talked about the twin valleys and the twin peaks. Now, this is a twin valley, And you can just measure from this point here to the lows and measure that, project it up, and it gives you this target zone right here. So that's pretty much where the market came. Now what we have to do now is to create more of a trend to more consolidation to move this market higher, which I think we'll do. Now you see we're oversold. Again, we're oversold. Markets come down, oversold. I think we'll start to see this market go higher, but we need to see probably maybe a couple more days consolidation. Then I think if it breaks out to the upside, add to your positions, because you can see we're long from the monthly and the weekly. And if the daily kicks in and goes green, buy some more copper. I think we're going to go higher. So let's clean the screen off. Go to our next market. And the next market is the silver market. Now, silver's had a really nice performance. You can see pretty clearly if we put this on here, you can see that the market is oversold. Let me just put the, that's not what I want. Let me just put the chart studies on. Donchian, boom. We just use the de facto studies, nothing fancy. We use the parabolic, which is a nice little indicator. Now, the parabolic is above the market, saying we could see some more potential consolidation, maybe a little bit of a pullback. But generally speaking, we're in a bull market here, monthly and the weekly still positive. We are in an oversold condition. So I think if we get a move back down to maybe the 33 level or even possibly 32, I think you want to be looking for a place to get long this market, because I think we are in a longer term bull market. It has broken a long-term negative force line, which goes back some time. And if we look at that real quickly, and let's just take our indicators off right here. And we just put a very simple trend line on. You can do that just right here. Just click from the highs, scope it down here, and you can see, I think this works out pretty well. You're broken out to the upside, and that's pretty significant. And I think we're going to see this market go higher. So let's clear that screen, go to our next market. And the next market is going to be the Reuters Jefferies CRB Index. Just before we left, the last writings we did was on the 14th, and you can see basically that this market, the 320 level, was where we expected resistance, and of course that was like a brick wall, and the market's come back down. And again, I want to just scope this out a little further and show you what we're looking at here in terms of this. Just get this. Yep. And we want to go from these levels right here, and I'm going to scope this out, just make it very simple, very clean. Let's take the channels off. Let's do that. And let's just make a very simple line chart. And you can see if you draw a trend line from the highs right here, this is the highest we've seen around 480 level, 475 level, and you just draw this long, you can see, boom, you see how that is just perfect. You can't get anything more perfect than that. Now, the key thing is here, in my mind, is if we see this market just begin to consolidate around, let's say, the 305 level, and then comes up and breaks over this line, just get long, because that means inflation is just on its way in a major way. And you can see this type of formation we're seeing here. That's what we're looking at. So really pay attention to this. This is going to be the catalyst that pushes gold, silver, copper, everything through the roof. So really pay attention to that. This is the line right here, this support line, this resistance line. If it breaks over this line, then we're on our way to much, much higher levels. Hey, this is Adam Hewison. I'm glad to be back. I hope you enjoyed this update. Obviously, there's some very serious markets going on here, so don't miss them. And I'll be back tomorrow, same time, same place. So thanks so much for listening, and have a great trading day.